Continue our coverage from the PDAC. With me is CEO Brendan Cahill of Excellon Resources. Brendan, how's it going?
Very good, very good. Happy to be at the PDAC. It's always fun.
Sure is. All right, let's get started with production results. Now, you got some great silver equivalent production that came out in 2013. Talk a bit about that and maybe your guidance moving forward in 2014.
Sure. So we produced 1.4 million ounces silver last year, 2.1 million ounces silver equivalent. And the big thing about Excellon is high grade, low cost, and cash flow. So our production costs are around $7 to $8 net cash cost per ton, or per ounce, and our all-in costs, which are the far more important metric in this market, are between $15 and $16 per silver equivalent ounce. I think that's the thing to focus on in this market. How are you generating cash flow? And that's really what we chase, is not ounces, not tons, but dollar signs.
Fair enough. Now, how about exploration? It's dipped, obviously, with the crash in prices last year. There seems to be a bit of a return to it. Dollars are coming back to exploration companies. Now, at Excellon, what are you focused on exploration?
Yeah, we're always focused on exploration. Excellon was originally a self-funding exploration play. We're mining these high-grade, exceptional high-grade mantos, over 800 grams per ton. Have been mining them since 2005 or so. They're on the periphery of a major carbonate replacement deposit system. And the ultimate source of this system is a 10 to 100 million ton deposit. That's really been the focus of Excellon's exploration since it got to the property in '96. So, exploration is always a focus in this market. It's not a primary focus, but this discovery that we have only about a kilometer away from the mine, it's not going anywhere. That's the great thing about rock. It doesn't go anywhere. Right now, we're focused more on the acquisition side, improving our production, improving our cash flow. But when the market turns and we get some credit for that exploration, we'll be back in there and drilling away on what we hope is Mexico's next great silver deposit.
Yeah, we'll get back to acquisitions in a second. I wanted to touch on Mexico. Now, with a change in royalties and taxes, we've seen earnings from other companies operating in the country take a hit. I was just curious to get your opinion regarding Mexico's shift towards, nationalization in a sense.
Well, Mexico is still one of the best places in the world to work. It's undergoing a transformation. And I mean, if you go to Mexico City, it's one of the most dynamic cities in the world. I'd put it up there against London, against New York, against Shanghai, Hong Kong, anywhere. There's a real vibrancy and hope in the people, a real sense of entrepreneurship. And I think the government is taking that and trying to reform everything at once. And that's difficult, and there's a lot of old historical political realities that have to be dealt with. So this royalty scheme that's being put in is in the context of energy reform, labor reform, education reform as well. There's going to be a lot of changes before those taxes are actually implemented. And for us, from our perspective, obviously nobody likes higher taxes, but as long as the taxes go to good uses, go to the communities, help bring some of these communities up from where they are, then we're in favor of them. Obviously, we're going to take steps to minimize the impact for our shareholders, for our cash flow, and for our company. But ultimately, I think Mexico is moving in the right direction. This is not nationalization by any means. It really is a concerted effort to improve the country. And so we work with the government closely, and we try to educate them on what we're trying to do on the ground to bring benefits to the local communities and to give them information from our perspective, which is very much local and working with the communities. And I think that's the great thing about mining companies. All over the world, we're at PDAC, you've got companies in Africa, you've got companies in South America, Asia. Mining companies go where others fear to tread. Right? They bring roads, they bring electricity, they bring hospitals, they bring education. And that's the great thing. And I think governments should learn to work with mining companies as a way of bringing, advancing civilization into places where it just hasn't been able to reach yet. And that's really the dialogue that we have with the Mexican government right now, is so that they recognize the benefits that we really do bring to these local communities. It's not just jobs. It's a lot more than that.
All right, good answer. Let's finish off with what you mentioned before, acquisitions. Now, is this something that the company is looking towards? Is this the time to do it?
I think so. Again, high grade, low cost cash flow, that's a rarity in this industry right now. It's three mantras that actually do have some play with investors. We have a great operating mine, small mine, 200 tons per day, 1.5 million ounces a year. That's what we're targeting for 2014, 2.2 million ounces silver equivalent. It's a great platform to build a company on. What we're seeing in the industry right now is the shift from big acquisitions, big projects. The mistakes of the past decade or so are really crystallizing and being realized right now. Buying at the top of the market is never a good idea. It's just simple business. We've got an opportunity now to really collect assets, build assets at the bottom of the market when the greatest companies were made. So that's the focus of Excellon right now, is to be an acquirer at the bottom when you should be doing that.
Thank you very much for talking with me today, Brendan.
Thanks very much for having me.
And thank you for watching our continued coverage at the PDAC. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com.